News out about Lloyds bonuses. What is it,
Yes,
Steph?
some news that's just out. Lloyds banker saying that they're going to get some of their top executives to pay back part of their bonuses. So some significant news from Lloyds this morning. Good morning, everyone. Yes, they've said they want to claw back bonuses of £2 million from 10 of the executives who work for the bank. Now, this is the first time that a British bank has actually done this, and it will mean that the chief executive will lose around £700,000 from his £1.45 million bonus pot. I'm going to be talking about that a bit later, but another story as well, the FTSE 100, we've talked about how the stock markets have been heading upwards again. So should we start putting more of our savings into stocks and shares? Well, let's just have a look at how you might have fared if you'd gone into the top performing firms 10 years ago. Not much use to you now, but let's just have a look at that anyway. Well, if you'd put your money on the tech firms, then the risk might have paid off. Apple shares were selling at just over $11 in February 2002. 10 years later, those shares are now trading at just over $500, an increase of a whopping 4,000%. So you'd have made loads of money on that one. Now, it's a similar story at the online retailer Amazon, where shares have risen from highs of nearly $14 10 years ago to around $180 today. But if you'd put your money in the banks, well, they speak for themselves. Shares in RBS have fallen from highs of £500 in February 2002 to just under £27 today. And shares at Allied Irish Bank, which is Ireland's biggest victim of the credit crunch, were worth almost €14 10 years ago. And today they're trading at a fraction of that, just €1 little. So big mixed rewards there. And with me now to talk about this is David Braithwaite from Citrus Financial Planning.
Morning.
Now, how do you decide what to invest in? Because you can see the volatility we have in the markets and the ups and downs of all the different shares. How can you pick out a winner?
It's very difficult without having a time machine, which is probably actually what you do need, isn't it? But it's about being in the market. If you are, and you have got the appetite for risk, you have got the length of time to be in it, and you can do it from just buying an individual share by going to your bank, which is easy to do, or you can do it collectively by going through ISAs or unit trusts. So there's various ways people can get in, but what they've got to bear in mind, as you can see from the slides there, is you've got to be looking long term. It isn't a get rich quick.
Yes, so how do you minimise risk then? Is it a case of not spending too much in the short term and thinking much?
You could do some not spending too much in the short term, but it's about spreading your risk, about not investing in just one asset class. And as you see from the slides there again, if you pick banks, you'd have lost. If you'd have picked tech stocks like Apple, you'd have done very, very well. And I think it's about a balance between having something that's perhaps a bit more higher risk, but also make sure you're investing in other things that are perhaps shorter term, lower risk stocks as well, and you can then survive some of the ups and the downs.
Now, there's probably some people sitting at home thinking, yes, I know how to put money in the bank to save it, but I wouldn't have a clue how to buy stocks and shares. How do you do that? Is it easy for someone to do?
It is really, really easy. You could literally just turn up to your bank and they will do it for you. Alternatively, you can collectively go in as a group of you, and you can do it through unit trust or ISAs that you could use as well, but you can do it through the banks or you can do it through financial advisors. There's various different ways that people can get involved now, much more easily than they could do, say, 20 years ago.
OK, David, thanks for your time this
Thank
morning.
You.
And as I say, I'll have more on that Lloyds story just after 8.
Yes.
All right.